Good morning and welcome to 7 at 7, your financial news capsule to get you clued in for the day. It's Wednesday, the 2nd of October. I'm your host Anirban Chaudhary, very much working to get you tidings from India and the world. Starting with news from the global markets. The persistent rally in stocks was knocked for a loop on Tuesday when the conflict in the Middle East escalated. Stocks fell even as investors shifted to safe havens. Bonds, oil, gold, and the US dollar all advanced after Iran fired a barrage of missiles at Israel following an advance of armed forces into Lebanon. In the US markets, the tech sector was the session's worst performer, with Apple and Nvidia Corp sinking more than 3%. Oil prices, of course, surged after Iran's attacks, raising the risk of supply disruptions in a region that pumps a third of the world's crude supply. A large-scale strike at the US East Coast and Gulf Coast, in fact, the biggest such industrial action in 50 years, has halted the flow of about half the country's ocean shipping. The strike started after negotiations for a new labor contract broke down over wages, and the strike blocks everything from food to automobile shipments across dozens of ports from Maine to Texas. It's a disruption that analysts have warned will cost the economy billions of dollars a day, threaten jobs, and potentially trigger a rise in inflation. Some bleak news closer home as well. The Indian economy slowed down in the second half of this fiscal year. Goods and Services Tax or GST collections rose 6.5% in September to 1.72 trillion rupees. Now, this is much slower than the double-digit rise that GST collections had recorded in the April to August period. Also, manufacturing activity, as measured by the Purchasing Managers Index or PMI, slipped to an 8-month low in September. Domestic car sales also declined for the third straight month despite automakers offering hefty discounts to boost demand. Do note that this comes after the output of 8 core infrastructure industries contracted 1.8% in August. This was the first decline in about 4 years. On to markets and their vigilant as never before regulator. Now, we all know that the F&O or the futures and options space has been a black hole, where 9 of 10 retail investors have lost money in the last 3 years. Well, that may now change as the capital markets regulator has introduced measures to curb retail participation in this segment. Well, for starters, Sebi increased the minimum contract size in index derivatives by 3 times to 15 lakh rupees, making options trading costlier. At the same time, it has reduced weekly index product offerings to just 1 per exchange, seeking to curb frenzied speculation among retail traders. Among other measures, Sebi has made it mandatory for brokers to collect premiums on options from clients on an upfront basis. From reckless punts, let's move on to more planned, calibrated, structured corporate bets. ET has learned that global private equity firm TPG and domestic players JSW Energy and Inox Wind are in a race to acquire Siemens Gamesa Renewable Power. The company could be valued at up to $500 million. It manufactures onshore and offshore turbines in addition to offering services to wind power developers globally. Siemens Energy AG had, way back in May, started the process for sale of its Indian wind turbine business. Over the weekend, there was news of a massive fire that disrupted operations at the Tata Electronics plant in Hosur, Tamil Nadu. That plant currently is the only Indian supplier of cases for the iPhone 15 and 16. Well, now it seems the damage is extensive enough to hamper production at that factory. Remember, this is especially impactful as it comes just before a festive season surge in demand for phones and other electronic gadgets. So much so that it may force Apple suppliers to arrange critical parts from China, a country from which Apple has been trying to shift supply chains. Remember, the size of Apple's business in India now is close to 2 trillion rupees. Finally, here's news about IPO-bound food delivery company Swiggy. A fund managed by US-based investor Invesco has increased the fair value of Swiggy on its books to $13.3 billion as of July 31st, according to a US regulatory filing. The valuation is 24% higher than the $10.7 billion value at which Invesco had first invested in Swiggy in January 2022. In the IPO, Swiggy is looking to raise 3,750 crore rupees in fresh capital and through an offer for sale of shares. Well, that's your 7 pieces of news for today. Keep listening and don't forget to grab your copy of the Economic Times for more news and analysis. This is your host Anirban Chaudhary signing off. Have a good one.